A shocking declaration from President Trump has sent shockwaves through the stock market. After announcing the end of the U.S.-Iran ceasefire, markets plummeted, oil prices surged, and gold saw its worst week in decades. Here's a comprehensive breakdown of today's unfolding crisis. Looking ahead, the coming days will be crucial as investors monitor an upcoming spate of economic data, including price reports and earnings releases. These figures will be essential in determining whether inflation is reaccelerating due to the recent oil shocks, which have sent crude prices soaring. This spike in oil prices, influenced by geopolitical tensions and supply chain disruptions, raises concerns about the potential for broader inflationary pressures. The Federal Reserve's response to any renewed inflation pressure will be pivotal. Market watchers are particularly focused on whether the Fed will shift towards rate hikes, especially after Jerome Powell's recent comments suggesting a nuanced approach to monetary policy. Such shifts in monetary policy could have significant implications for borrowing costs, consumer spending, and overall economic growth. The current turmoil in the markets has deep roots in ongoing geopolitical tensions that have persisted for months, if not years. Recently, the U.S. stock market experienced a robust two-week rally, with both the S&P 500 and NASDAQ recovering from earlier losses linked to escalating tensions with Iran. This volatility was exacerbated by the assassination of a high-ranking Iranian military official, which heightened fears of retaliatory actions against U.S. interests in the region. Investors remained cautious, fully aware that the Middle East's instability could disrupt market momentum at any moment. The Federal Reserve's recent decision to maintain interest rates added another layer of complexity. While this move signaled a desire for stability, the Fed also hinted at potential hikes if inflation pressures were to rise again, indicating a delicate balancing act. Historical context reveals that past conflicts, especially in the Middle East, have led to significant market shocks, with investors often reacting swiftly to news from the region. The rapid recovery from previous downturns has made the current sell-off feel even more acute as market participants grapple with heightened uncertainty. The motivations of key players, such as former President Trump and Iranian leaders, remain pivotal in determining the path forward. Analysts believe that any escalation in military conflict could lead to oil price spikes, further impacting inflation and consumer spending. Conversely, a diplomatic resolution could restore investor confidence and stabilize markets. As geopolitical dynamics continue to evolve, market participants are closely monitoring developments. The outlook remains uncertain, but if diplomatic channels successfully de-escalate tensions, we could witness a significant rebound in investor sentiment, potentially paving the way for sustained market recovery in the near future. Today's sharp sell-off in U.S. stocks signals a significant shift in investor sentiment, particularly amid a market that was nearing record highs. This downturn is not merely a reaction to isolated events. It reflects deeper concerns about economic stability that have been brewing for some time. The surge in oil prices, driven by geopolitical tensions and supply chain disruptions, raises urgent inflation concerns that could complicate the Federal Reserve's monetary policy strategy significantly. Analysts fear that a supply shock from escalating conflicts, especially in oil-rich regions like the Middle East, could lead to sustained higher oil prices. Such a scenario may reignite inflation fears that the Fed has been diligently trying to manage through interest rate adjustments. The implications of these developments are profound and far-reaching, affecting various sectors of the economy and the everyday lives of consumers. Rising fuel prices directly impact consumers as they lead to increased costs for goods and services. Transportation, a critical component of supply chains, becomes more expensive, affecting everything from grocery bills to shipping costs for online purchases. Additionally, the shift in market dynamics is palpable. Sectors such as energy stocks are experiencing pressure from previous highs, while technology and semiconductor stocks face growing uncertainty. Investors are reassessing the sustainability of the AI boom, with macroeconomic turbulence raising questions about future growth prospects. For the average person, these market fluctuations could herald a period of increased prices and economic instability. Families may find themselves grappling with higher costs at the gas pump and in their everyday purchases, while businesses may face tighter margins and reduced consumer spending. The broader economic growth outlook could be dampened, leading to a potential slowdown in hiring and investment across various industries. Looking ahead, investors and policymakers alike must navigate this complex landscape with caution. The Federal Reserve's next steps will be crucial in determining whether inflation can be kept in check or if it will spiral further out of control. As the situation evolves, stakeholders will need to remain vigilant, focusing particularly on oil price trends and geopolitical developments, as these will shape economic conditions in the months to come. On July 14, 2026, U.S. President Donald Trump announced that the ceasefire with Iran is officially over, marking a significant escalation in Middle Eastern tensions. This declaration came after a series of attacks near the strategically vital Strait of Hormuz, a critical choke point for global oil shipments. The strait sees approximately 20% of the world's oil supply pass through, making any disruption a cause for global concern. The announcement has reignited fears of conflict in a region already fraught with instability, underscoring the precarious geopolitical landscape that has persisted since the U.S. withdrawal from the Iran nuclear deal in 2018. This withdrawal not only dismantled diplomatic efforts, but also fueled Iran's nuclear ambitions, leading to increased hostilities. The stock market reacted sharply to this news. The Dow Jones Industrial Average suffered its worst day in a month, closing down significantly. Investors appeared rattled, reflecting broader fears about economic repercussions tied to potential military conflict. Meanwhile, the Nasdaq and S&P 500 exhibited mixed results, as tech stocks managed to rally despite the overall negative sentiment. Oil prices surged dramatically, with crude oil climbing on the news as fears of supply disruptions grew. The price of Brent crude reached levels not seen since the early days of the COVID-19 pandemic, triggering alarms among industry analysts and policymakers. In a surprising twist, gold, typically viewed as a safe haven during geopolitical turmoil, plummeted to experience its worst week in 40 years. This unusual market behavior reversed the asset's traditional role, reflecting a volatile risk sentiment among investors who are grappling with the implications of heightened tensions. The decline in gold prices indicates a complex market psychology, where investors are either overestimating the likelihood of a diplomatic resolution or underestimating the potential for conflict. Trump's warning created a precarious environment characterized by threats but a limited appetite for full-scale war, leaving market participants uncertain about future developments. Looking ahead, market analysts will be closely monitoring both domestic and international responses to this crisis. The balance between diplomacy and military action will significantly influence economic stability in the months to come, with particular attention paid to upcoming negotiations and potential sanctions. As we face these unprecedented market challenges, how will investors adapt to the shifting geopolitical landscape? Share your predictions in the comments below, and don't forget to subscribe for daily deep dives into the most pressing news.